Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April the 15th. Just wanted to touch base on what we've seen in the market over this past week, where we see markets moving from here. And as we've just started earnings season, wanted to touch base and talk about what we're seeing from the banks that have reported so far and what those indicators are telling us for future earnings, as well as the future of the economy, the consumer as a whole, and where we see some of the key important economic data moving us. So last week was a really strong week on the S&P 500. It finished the week up 2.9% ahead of coming into earnings season. And what we've seen so far from the big banks, who have been the ones that have really been the ones reporting this week, is they're always typically the industry that kicks us off into earnings, has been phenomenal earnings out of the banks. And what we're learning from the bank earnings is you kind of have to take them at fair value, and you have to kind of peel back a little bit to look a little bit deeper into the earnings, because a lot of the banks are releasing a lot of the loan loss reserves that they had to put in last year in preparation for what could have been very difficult economic times had the Fed and Congress not acted as quickly and with monetary and fiscal policy as they did. So banks are now releasing some of those, and those are going to the bottom line. But when you peel it back, what the banks are really telling us is that the consumer saved so much money during this pandemic. So as stimulus was coming in, money was being saved, and bank deposits were going up and bank loans were going down. Consumers weren't borrowing as much during this time, but they were saving as much. And what we saw today was retail sales numbers coming in unbelievably strong. And so what you're starting to see is all that money that these consumers have been saving over the past year during the pandemic is starting to make its way back into the economy. And that is phenomenal news. And so as we sit here and we're talking today, we are at all-time highs on the S&P 500, and we've been battling back over the last couple of weeks shifting between growth and value, and as we've just been oscillating between the two sectors. And you can almost tell what's going to happen on a day-to-day basis based on the 10-year Treasury. The 10-year Treasury goes up, the growth and tech names lag behind, your industrials, your cyclicals, they outperform. Then the next day, the 10-year Treasury dips down. Then you have tech outperformance and your growth name outperformance and underperformance from the value sector. So how do you decide what to do? And we kind of talked a little bit about it last week, is you've got to find the names within each sector, both growth and value, that has sustainable growth over the next year to 2 years, whether they're going to be beneficiaries from an infrastructure spending bill, or the products and services that they have are ones that consumers are showing demand for and are showing that they have an appetite to be in, to go out and spend money. And so you want to find places where the consumer is going to do that. So I know it can be frustrating as we're going through this time where it seems like it just is going back and forth, or like the old video game Pong, right? And you're moving the ball back and forth, and that's kind of what's been happening in the market. But remember, the big growth names sold off very strong in February of this year, and they still have quite a bit of catch up to do to come back up with the value names. So as always, if you have questions about what's going on with your portfolio or any way that we can help you, always feel free to reach out to us. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of the week. We're looking forward to the big week that's next week in earnings, and to break down a little bit more, but we're off to a great start. So if you have any questions, again, just reach out to us. We're here and we're watching, so we'll be on it and look forward to talking to you next week. Thanks.